Emerging market stocks look cheap, but they've looked cheap for a long time. When is it time to buy? Here to talk with me about that is Gabriela Santos, a global market strategist with JPMorgan Asset Management. JPMorgan, I've heard of them.
Yes.
Thanks for being here with me.
Thank you for having me.
What do you look at if you just want to figure out, broadly speaking, emerging markets, are they cheap? If someone was looking at just a basket like an emerging markets fund or something like that, you look at a price to earnings ratio, what do you look at to tell whether they're cheap?
So for emerging markets, we prefer to look at the price to book. It's a little bit harder to, let's say, get any sort of manipulation in the numbers. So that's why we like looking at price to book.
And where do things stand now?
Things are looking very, very cheap for emerging markets. Price to book is trading at around 1.3. To get a comparison, those are the kind of levels we saw during the global financial crisis. So it's looking very, very cheap. One of the only cheap regions in the world, really, if you look at the US and Europe.
So why should I not go in guns a-blazing, it being so cheap in emerging market stocks right now?
So what's been interesting is that you could have made this argument for quite some time now for EM, right? It's been underperforming developed markets since the peak of the commodity boom in 2011, and it's been cheap ever since and only getting cheaper. So we can't only look at valuations. We have to look at some sort of other catalyst in order to trigger a rebound for the asset class.
Well, what are you waiting to see before it's really time to go in heavily into emerging market stocks?
So we would look at two things outside of the valuations alone. We would want to see some more currency stability, and I think we're getting so much closer to that, right? EM currencies, some of them were so overvalued just a few years ago, especially those commodity countries. And you've seen a significant repricing of those currencies. So maybe we're closer there. Where we may be still a bit further away is more on the growth and earnings outlook, right? We want to see a rebound in the earnings outlook instead of steady negative revisions, which is what we've seen for a while.
So better earnings growth, when we see it, it's time to buy, broadly and heavily. But right now, there must be some pockets where it's time to buy among emerging markets.
So that's such a crucial point for EM as a whole, right? There are so many different regions and countries within it. So really the story becomes so much more nuanced. I would say we have two extremes within emerging markets of what we like. One side are some positive growth stories, right? It's not all doom and gloom. It's not every country that's in a recession. So within those, I would place more stable growth stories. For example, Korea and Taiwan in Asia. For example, Mexico and Latin America. Those are countries that have shown very stable growth and earnings for a few years now.
Okay, those are your stable growers. And you have ones out there that are maybe not as stable, but are just too cheap to ignore.
Exactly. So it doesn't have to be just a positive story. Maybe at one point, valuation alone can be enough of a catalyst when it becomes so crisis cheap. And I think a great example of that is Russia.
I'm sorry, I thought you said Russia. That's but they did well. The Russian market did well recently.
They did so well last year. It was one of the top performing markets, and that's really because any sort of valuation metric you look at for Russia was so unbelievably cheap compared to itself, compared to EM, compared to the world. And so you saw just a pure multiple re-rating last year of Russia, and still this year you could still see more.
Still potential. Are there any positive signs to hold on to, signs that there could be some improvement down the road, or is it more just about some multiple re-rating?
It's still, I would say, for Russia, still a story of multiple re-rating. It's still so cheap, and the currency is very cheap as well. What would take a little bit more than that, I think, is some more improvement in oil prices, removal of sanctions. I think the growth outlook's still murky. It's more of a valuation story for now.
Okay, great. Thanks for sharing those ideas with us.
Of course, thank you.
And thanks for watching.